Hi, this is Chuck Oliver. Welcome to this week's Hidden Wealth Solution Review. Well, I want to talk to you about the two, right now, greatest retirement risks. And the first one many of you have asked about is retirement tax risk. Because, of course, we have a changing of the guard, a new administration, an enormous amount of stimulus that's clearly now earmarked to go out on top of all the stimulus we've already sent out. And we just had a record deficit month spending, $144 billion. Folks, $144 billion in December. It was just released this last week. Biggest monthly deficit we've ever ran. That's with a lot more unemployment benefits paid out. And that was before we lost about 200,000 more jobs, right, than what we thought we had lost. Or let's just say another 200,000 of additional unemployment claims made in this last report that came out this week than last month. And in fact, we haven't seen that type of unemployment increase for benefits going all the way back, I think they said 8 months. So clearly, if we have fewer people paying into the tax rolls, we have clearly more stimulus that we have to obviously keep our country afloat with, then it's very clear the tax rates are going to have to go up. And if we already have a pro-tax new elected president and vice president who are obviously looking for many things to be financed, from infrastructure to Green New Deal to Medicare for all to forgiveness of student loans to free college, I don't think it comes as a surprise to anybody. I've been preaching this from the rafters. If this was going to run its course, clearly taxes are going to head higher. The second greatest retirement risk, in particular right now, is the uncertainty. There was an article on MarketWatch saying, "Reckoning Ahead, Why Investors Continue to Ignore Emerging Market Style U.S. Politics." So in other words, our politics from, the first time in history, one president being impeached twice, with what took place this week, on top of obviously all the political unrest, clearly very divided, what we define as polarization, right? Basically two starkly different directions that our politics are taking. And it's very clear that as that happens and there's more political unrest and there's more uncertainty, then many people are going to be more and more nervous, and there's obviously going to be market volatility. And the second greatest risk is what's called negative sequence, or what we call sequence of return risk, which is impacted by negative sequencing, meaning while we're trying to get to retirement or through retirement, in particular when we're trying to distribute. So it's different from accumulation. It's a whole new ballgame, folks, when we help you get from going to retirement, getting better through retirement, because then it's distribution. And negative sequencing of risk is where if you're already pulling money from your accounts, and many of you, the number one fear is running out of money or having to reduce your lifestyle, that if the market then takes a correction, or maybe even, as many are rumoring, even a major potential crash, then as you're pulling money out as a percentage against the account value, when the account value drops, I know it's hard to believe, but a 30% drop. So let's say you just were moving along, and many are predicting a 25% drop. And let's say you'd taken 5% out of your retirement account, and that was a year that the market, on top of you taking 5%, lost 25%. The return you would have to earn to get back to even is almost 42%. Now, I want you to really think about that. What are the odds that the market's just going to bounce back? That's why many clients don't realize the risk they're taking. And I want to teach you how to remove both taxes and sequence of return risk by having upside with no downside on certain retirement income assets, and then having your own risk dictated for as little risk as you want to take, but for the highest return you can get on some of your other assets, and doing it all tax-free, insulating your income from the IRS, preventing Uncle Sam from getting your children's inheritance. And obviously these things will offset inflation. Imagine maybe as much as 50% or more of higher retirement income by not having to go through these risks of taxes and sequence of return risk when the market ends up losing. Folks, go to retirementprotected.com. That's retirementprotected.com, and I'll teach you how to accomplish these things. It's a log on and learn educational webinar. I'll be teaching this Tuesday, just like your friends and neighbors all around this country have learned. Let me teach you too. Imagine more financial success, less stress, less worry, more financial peace of mind. That's what many of you are sharing that you're very concerned about, is not having to reduce your retirement, making sure you can reach retirement, and clearly making sure that you don't have to worry of another major market crash or taxes that could go beyond what any of us have paid tax rate wise in our lifetime, folks. Protect yourself. You've worked hard for your money. Let's get to work. Retirementprotected.com, retirementprotected.com.